Hi, hello. We are live on CBC's Facebook page as well as CBC's YouTube channel. Hi to our viewers who are tuning in. We're so excited to chat today about the thing that everyone loves every year. You're doing your taxes, and we have Shannon Lee Simmons here with us to walk us through it. Shannon, you are the founder of the New School of Finance, a financial advisor, planner. You are a go-to person for me when we're doing personal finance stories, but you also can help people through their taxes. So tell me a bit about what you do and why you are a great person for people today to throw their questions to.
Yeah, well, we also have a public tax division at New School of Finance. So we do people's taxes. So we're literally on the ground, frontline, helping people navigate this time every single year, educating them on how to do it in a less stressful way next year. And we have like online courses to help with that. So really, we're like a one-stop shop for people and their money.
Perfect. So every year you're helping them through this, but this year is particularly different because of the work and financial situations that Canadians have found themselves in. Millions of Canadians either lost their job this year or worked in a very different manner, potentially working from home. And so we have potential impacts there that we can walk through when it comes to their taxes. So I just want to shout out to our viewers, if you can drop your questions into either the Facebook comments there or on YouTube, then we have a great producer, Marielle. She's fielding those questions and she'll get them to us, and we'll try to get through as many as we can today. We're also hoping to do a story for cbc.ca about this to follow up on the big questions and any other ones that we didn't get to. So lots to go through today. I wonder, Shannon, though, if we could just start with, tax season almost kicks off when you get, if you're working, when you get that T4 from your employer. But this year, there are different forms to be looking out for. So can you walk us through what other forms Canadians could be expecting?
Yeah, so I think the big one that everyone's talking about or waiting for, which you may have already gotten if you're listening in, is if you were on one of the government programs last year, whether that was the CERB, the CERB, or the CRB, or this CSB, like all those acronyms. So if you maybe had support from the government last year, that's going to show up on something called a T4A. And that's the form that you're looking for. And I think anybody tuning in right now, the number one thing that you can do for yourself is making sure that you have a MyCRA account. So if you can log into your MyCRA account for individuals, and you go to previous tax years or taxes and tax slip information, you click on that button, you can make sure that you have all your tax slips, all your T4s that are there. So you don't have to move, maybe you moved, maybe you weren't living where your tax stuff was sent. If you have a MyCRA account, you can make sure that you've got all those T forms so you don't have to worry about it. But the ones that are going to be collected for the money that you made on those programs is the T4A. And then there's another form that we can probably dig into a little bit down the road when we're talking about the work from home office thing. But there's also this T2200 that a lot of people are asking about if their employer should be signing one. We can talk about that later. But those are the two really new forms that I think people will be seeing this year if they've never had something like that before.
There's also the T4E, right? There's the T4A and the T4E, depending on where you got the CERB from, right? Whether it's CRA or Service Canada.
Yeah, that's a great point. So I don't find that one so out of the norm because I've been seeing T4Es forever. So a T4E just means that you're on the regular EI program. So you were an employee, you were laid off, you qualified for regular EI, and you were on the program. Now they made changes to EI this year so that everyone was the same as what the CERB was. So it's like sometimes if you qualified for EI, but maybe you wouldn't have gotten the $500 a week, they were just like across the board. Service Canada's EI program is $500 a week. CERB is $500 a week. They're equal. It doesn't matter. And it was just basically the logistics of it. But typically before, if somebody was on, parental leave or if they'd been laid off, they would have gotten a T4E. And so, that is another form to look for this year because maybe you've never been laid off before. And that was unfortunately your first time maybe experiencing that too.
Yeah. First time for, potentially, millions of Canadians as they are going through this and through their paperwork. We do have a question about deadlines. So in terms of filing deadlines and paying deadlines, but we know that the filing deadline isn't changing. It's still April 30th, but for personal taxes, but that the payment deadline is down the road. But we do have a question from the payment could be pushed forward by a year. You have that time to pay back potentially, depending on your income. We'll dive in.
Right.
But the question here, this is more complicated than I was expecting. So one question here from Bystander on YouTube asks, are there any indications that the CRA will delay the return filing due dates beyond April 30th for personal tax returns, May 31st for partnerships, and June 30th for corporations? They say thank you for answering. So I didn't see any indication of that. Did you see any indication that the filing date might be pushed forward?
No, I didn't. So if I can just really drive home that point. So there's a difference between filing, which means like you have your tax preparer put it through, or you do it yourself, and then actually paying any balances owing. They're two different things. And I know that it's easy to get lost on those. I don't think that they're going to extend it. I mean, I don't have a crystal ball, but because they did make an extension, a payment extension for some people who might have been on some of those government programs last year, and when they made that announcement, they also said, they hinted, because we're not changing the filing deadline, but here's what we're going to do. So I really don't think that they're going to change the deadline. And just to kind of confirm, the big deadline that everyone usually talks about is this April 30th filing deadline for personal taxes. And then I get a lot of questions around the June 15th for self-employed people, which would be, if you're a sole proprietor or something like that. So here's what I would say, though. I worry about people thinking that they have until June 15th to file their self-employment taxes, because the money is still due April 30th. So how can you know necessarily what you might owe by April 30th if you haven't filed yet? And so to me, yes, that's technically correct. You don't have to file your self-employment taxes until June 15th. However, my blanket advice to people is try to get it done by April 30th, because then you can pay the right amount and you don't get charged any interest, because it's all due on April 30th anyway. So that would be my, blanket advice, is that, yes, I see that, but, not ignore it, but let's really try to figure out what you owe by April 30th, because that's the deadline.
And then can we just dig into that delay in terms of paying? So who doesn't have to pay right away? Who has a year to pay any of the taxes that they owe?
Right. Very specifically, if you made $75,000 or less in 2020 and you were on one of the government programs such as CRB, CSB, the caregiver, like CERB. So if you were on one of those programs, you have an amount outstanding and you made less than $75,000 a year, you have 1 year. So you have until April 30th, 2022 to pay those taxes without them charging you any interest, but it's only specifically those people. So if you're a person who maybe wasn't on one of the government programs last year, or maybe you ended up being on those programs, but then having a good year at the end of it when you came off those programs, or maybe January and February were super strong and you made over $75,000, then you're not going to, just because you were on one of the government programs does not extend for you necessarily.
We have a question about the forms that we were just chatting about. So Aishu asked this question from Facebook, and they're asking, does the T4E cover CERB and EI earnings, or do I need another document? So I guess it would depend on where the CERB was coming from. But what do you think there? Does the T4E cover both?
It should, the T4E should specifically cover EI, and because it's done through Service Canada, and the T4A, if you were on CERB and CRB, you might actually have both of those on the one T4. So I have seen lots of T4As that have in box 197, it's got your CERB, and then box 202, it's got your CRB, and then there's another box where the income tax is taken off for some of the programs, but the T4E is typically for the money that's gone through Service Canada, so just the EI.
So, I mean, they should be able to log into their My CRA account and just anything that they do need in terms of the T4A or the T4E, that would be there, right?
It'll be there for them. And that's the thing. And actually, one thing to note, Jacqueline, I think it's important for anybody listening, is that I think 4 days ago, the CRA shut down 800,000 Canadian accounts preemptively because of they found their information had been compromised. And so they were worried, not at the CRA, your login credentials with the same email address were found somewhere on the internet. And therefore, preemptively, they're just in case, we're shutting you down. And so a lot of people who are trying to get into their MyCRA right now may not be able to because of this error 21. So the best thing to do if that's happening to you is that it is okay. You can reset it. It's going to be annoying. You're going to have to get on the phone. I've had some clients say that they waited 3 hours to get through. So just, put your phone on speaker and like watch a show, do some work. And then eventually when they pick up, they're going to need last year's tax information from you if you've got it. So hopefully you've got notice of assessment, but they do have a way of asking other security questions in case you can't. And then they can reinstate your account that way. So that would be something to do when you've got a couple of hours to get that account back open.
Yeah, good to check on it, now and see if you are going to have to line up to do that.
That's right.
Another form question from Stephanie Matsuda Day on YouTube. She's asking if my T4 for CERB is on the CRA, but I haven't got the physical copy in the mail yet. Can I use that electronic file in order to file my taxes?
100%. That's what it's there for. Yes, right. Absolutely. Yeah.
Perfect. Okay. And one more T4 question here. Margaret Ostertag via Facebook. She's asking, my boss laid me off last March and still has not supplied me with my T4. What do I do? Any advice?
Okay. So legally, your employer has to file that T4 by February 28th of this year. So number one, I would check. So just because you may not have gotten a physical copy, it may still be posted to the CRA, MyCRA account. So I would check there first. And it should be there, even if you haven't gotten the physical copy, because sometimes employers, they'll forget or they'll be lazy or something will happen administratively for small businesses sometimes where they file it. So they've done their due diligence, but they haven't actually mailed and printed the copies yet. So that's number one. That would be the easiest solution. Number two would be to call your old employer, speak to the manager, speak to somebody and see if they have that information for you. Like what did they file to the CRA? And you can ask, what box, what does box 14 say or something like that, but they should have filed it legally with the CRA already. So that is a bigger issue if they haven't, which I can't speak on behalf of like what the penalties might be for them from the CRA.
Yeah. So perhaps Margaret was waiting for that in the mail and maybe it's on MyCRA if she's able to check there and it might show up there.
Absolutely.
Can we dig into this working from home situation? Because I know it's just like this big, elephant because there's two ways to do this working from home claim. There are, millions of Canadians, set up in their living rooms or basements as we are right now, to do our work. And that, we're able to claim some of those expenses that are related to our workspace, but there's two different methods. There's the flat rate method, and then there's the more detailed method.
Yes.
And where do you want to start? Like in terms of, who would benefit most from each, or what do you think?
Yeah, I think I want to start with like, what's the difference between the two methods? And then go from there as to like, okay, so now we know the difference, then who's this one better for and who's this one? So first of all, even to qualify for this, so backing it up even further, if you're listening to this and you're self-employed, just like go make a tea. This is your time to just go chill, because I'm not talking to you right now. I'm talking specifically to people who are employees or employed in 2020 and are not self-employed, because self-employed people always had access to the home office working from home deduction. This is nothing new and nothing changes for them. So like, that's what I said, like this question is not for you. However, most of the time, if you're an employee, you don't have the right or the ability to write off your home office expenses because you're not working from home. You're working at the office. And if you did work from home, maybe it was like, you called in sick or something like that, and you're kind of working from home. It wasn't this officially mandated by your employer that you need to stay home and this is not your workplace anymore. So if you had to stay home 50% of the time in 2020 for your job, then you qualify maybe for the first time ever to have employee work from home expenses. And so there are two ways that you can do this. So I actually think I'm going to start with the detailed method, because the flat method is like the antithesis of the detailed method.
Yes,
so the detailed method, the detailed method is kind of close to, I know this is jargon heavy. I need everyone just take a breath, hang out with me for a second, because I'm going to get a little granular, but I need to, or else you won't understand. So the detailed method is like a close cousin to what self-employed people had, but it's not the same. So if you have a self-employed friend who's like, you can write all this stuff off, again, no, thank you. That's your information, not my information. So how the detailed method works is similar, but not entirely the same because it's very restricted. So what you do is you write out your annual fee. Let's say you qualify, you write out the annual cost of your electricity. Let's say it was $1,000 a year, okay? And your heat. Let's say it was $1,000 a year. I'm just going to use really big numbers, okay? And let your water and your utilities, your internet, like your home office, your internet, and then rent. Okay, so this is a big one. So let's say that you added everything up and it was $10,000. Again, I know that is not a realistic rent. I'm just using a really like nice round number, but let's say you added up your whole annual cost that qualified, you got $10,000. And then you came up with a percentage based on the square footage of your home and the time that you were there. So let's say you were working there 100% of the time. So like most of the week, and it was, 400 square feet of your 1,000 square foot apartment. And so you worked out that like, okay, once I do this calculator, which is on the CRA website, I think that I can write off 20% of the total cost of my house, right? So if it was $10,000, the program that you're using or your tax person will apply at 20%. And that is a $2,000 deduction, which is huge. So I'm being really exaggeratory right now just to like make the math make sense.
Yeah.
Okay. The flat rate, so that could be really good for some people. However, here's what's not included. And I think that's very important to note. The reason I got to 10,000 is because I added in somebody's rent.
Right.
If you're not a renter and you own, unfortunately, your mortgage interest doesn't count, your mortgage like principal payments don't count. So really you would only be adding up your like electricity, your heat, your water, and your internet. So maybe you would only get to like, $3,000 worth of annual expenses. And then you apply that like 20% and it's nowhere near as high, right? So and what would that be? Like $600, not even, yeah. So like it would be somewhere in that zone. So if you're a homeowner, you really want to work on that calculation. If you're a renter, I think it's probably the detailed method that would likely be the highest for you. So that's that detailed method. And if you are doing the detailed method, you need to get your employer to sign a T2200S form. They have to sign it. You don't have to submit that with your taxes, but you need to be able to say, if you ever get audited by the CRA for this, hey, here's how I came up with my calculation for the home office. And here's my employer mandating that I stay home and that this portion of my home office was necessary and these expenses were necessary. So a lot more convoluted, but potentially a bigger write-off, especially if you're a renter.
And you need to have not only that form, but in case you get audited, the bills for that whole year to make sure that you can prove that those, were the expenses that, your house had.
That's right.
You mentioned 100% of your time. And I think you meant like 100% of your work week.
Working time.
Right. Do you also have to divide like the time that you spent working compared to, when your home office was sitting empty or when maybe your kitchen table was actually being used as a kitchen table instead of an office?
Yeah, absolutely. And so that goes into that calculation is like not only the square footage, but then the portion of the time that you're like of your waking hours, let's say, that was used for work versus business. And one thing that I would do is if you actually just put into a search engine, like CRA, home office deduction, COVID, there's a calculator right on the website that will show you which one for you is worth more. And so it's guaranteed to be legit because it's from the CRA. Yes. And then you can also work it out. But yes, there is a time point in there where it's like, it was 100% of my workday was there, but not 100% of my time. So maybe only 50% of the time of my waking hours, I use the kitchen table for business versus for that. And therefore, instead of writing off, this percent, it would be in half yet again.
Yeah, I came across that calculator too, and I was like, oh, finally,
because it's so helpful.
Yeah, you really want that sort of checklist to be able to go through exactly, the square footage, the this, the that, and to be able to break it all down. And it makes this, thing that could be intimidating because math, but it makes it a little bit easier to try to tackle. There's a question from Saba Nazir via Facebook, and they're asking, can you write off a portion of property tax? So that would be for a homeowner in that case. But is that included on the list, property tax?
No, it's not, unless you're a commissioned employee. So again, that's the problem. The homeowner here really is not set up for the best bang for their buck as far as the detailed method goes. And so I've seen a lot of, when I've done this calculation for a lot of our clients, the flat rate, which we can explain now too, tends to be easier, faster, and worth more for a lot of people who are homeowners. So the flat rate method, you don't need to get that form signed necessarily like from your employer. You just tally up how many days of your year that you were mandated to work from home. Like vacation days don't necessarily count for that, by the way. So just like the working days that you were working from home, and then make sure that you do run that by your employer if like there's any sort of discrepancy around what it might be. And you can write up to 200 days for all of 2020. So I would check in with your employer if maybe you were calculating up to like 170 or something, and then there was a discrepancy around those last 30 days, like what would their stance be? What's your stance? Like making sure that you're agreeing. And then you multiply that by $2, and that's your deduction. So if you had the full 200 days, you multiply that by $2, it's a $400 deduction. Done. No work, no effort, no receipts, just like done. And so a lot of people are opting to do that, who, especially homeowners who, they work out their, electricity and their heat. And then the percentage, once they take their time and square footage into place, and it's like, well, that's only a $200 deduction. I'm going to do the flat rate. So again, I do think visiting that, calculator is worth your 5 minutes of time to see which one's the bigger deduction for you.
If there are more questions about working from home, throw them into the chat. We'll try to get to them. I want to move on to a couple of other topics. So students. So are there any differences? This is coming from Danny McKenna on Facebook. Is there anything different about this tax season that students need to know in particular?
Yes and no. So I think how important they are. I think that's the thing. So number one, if you're a student, you're still going to get, if you were on the CSB last year, which was for like the Canada Student Benefit, it is considered taxable. So just like CERB, it's going to be treated the same way, and you're going to get a T-slip. And so it's going to be taxable income. So that's something to watch out for. However, one thing about being a student is that you probably have tuition credits that are going to completely offset that. So I don't know that I would be worried about having a big tax bill if you've got those tuition credits. So making sure that you're applying those tuition credits and putting them in properly. And then, if there's any carry forward tuition from previous years, if you didn't have tuition this year, you could also apply those and carry them forward. So that no matter, like, as soon as you put those into your tax program, or your tax person does, it should net out. Like if you have enough tuition credits, it should net out so that it'll go all the way until you don't owe any federal tax. So the more tuition credits you have, the less tax that you're paying. So that's a custom answer, but I wouldn't be overly worried.
There's another question on this topic from Aubrey Gallant on Facebook, or Gallant. Aubrey, sorry. If you are a full-time student and now that school is not in the classroom, can you use anything for a tax deduction? And I wonder if that's kind of on the same sort of, idea of that they're being a student from home as working from home. Is there anything there for students?
Not that I've heard of. Like there's no spot for that on any of the tax preparing software. I haven't read anything about that. But you know what? Never say never, in the sense of like, maybe not this year, but maybe down the road, something might happen, or these programs and these changes there's so many new policies, even within the last 12 months, that who knows? And we're still in the pandemic, right? So like, I think that next year we might be having similar conversations, and there might be new benefits out there for people that they realize were maybe left behind or left out of the programs or something like that.
And, along with working from home, with, the potential to have been laid off over the last year and those changes, like it's just such a different year, but it's also different for parents too. And I wonder, in terms of potential tax surprises for parents. Many of them have had their children at home with them all year, and not at daycare, or maybe perhaps limited amount of daycare, just trying to keep that bubble small. And that is typically a big expense that parents claim. So I wonder, what you're expecting in terms of potential surprises there for parents.
This is a huge point, and I'm so glad you brought it up, because a lot of people don't bring that up, and it's a big change this year. So if you have childcare, the typical amount, if you have a child under 7, is that you can deduct up to $8,000 per kid. So keep in mind that most people are going to spend between $15,000 to $20,000 per kid, and then to be able to get it to write off as a deduction, $8,000 of that is huge for families. And if you've got 2 kids, that would be a $16,000 deduction to your household, which is it works the same as an RSP deduction, right? So it's like, imagine you made a $16,000 RSP contribution. It would be the same positive impact on your tax as well. This year, what I'm noticing is people, they may not have spent the full $8,000 this year because, maybe for 6 months they weren't paying childcare. All the day camps that they used to go in weren't running this year. So all the things that used to qualify for that, like maybe their caregiver wasn't coming. Now they're like, okay, well, I still have $6,000 worth of deduction, but it's not the full amount. So, and then, in the before times, maybe they were expecting, a $2,500 refund or something. And now this year, maybe it might only be, $1,000 or $1,500, which again is still great. But if you've been thinking about that and not really thinking of the logistics of how that deduction works, and then that might be a surprise. And I always remind everybody that, yes, that's a surprise, but you spent less. So it's not a bad thing.
Right.
You didn't spend $20,000 and then only get $8,000 deduction. So you only spent $6,000. So we're foregoing that, but you're saving all those other pieces of money. But again, people like to compartmentalize their money. And so that seems like over there, and this is your tax refund, they're like separate things, and they're not. So that has been a piece that I've been talking people through, and also to students who maybe had a break on their student interest, or people who had student loans rather, they maybe didn't pay student loan interest all year. And so, or for a lot of the year. And so maybe that tax credit that they're used to is also not coming through. So there's a lot of minor changes for people.
There's one more working from home question. I just wonder if we can squeeze in about equipment. So, we were talking about workspaces, the space and the utilities and all of that stuff. But this is coming from Saba Nazir on Facebook. Are new equipment purchases relevant? So computer desks and chairs for work from home, or laptops for children for school?
I'm sorry. I'm going to be the bearer of bad news. The only people that can write off computer, laptop, or tablet for this work from home is a commissioned employee, not a salaried employee. And nobody can write off their wall decorations or their office furniture or their desk. It is the biggest disappointing piece of information that I have for everybody, because I know financially, on my financial planning side, for the rest of the years besides these 10 weeks, I have been navigating people through setting up home offices and using money to create a space that you can actually work from, but none of that can qualify for the home office deduction. I'm so sorry. Even if you're a commissioned employee, that's the only time you can write off the computer, but still never furniture or anything like that.
And I mean, that can really
different
be
for
a huge
self-employed
expense.
people.
Yeah, it can be a huge expense when you're thinking about outfitting the working, people in the household, also the students. That can be a lot to swallow in a year. But Shannon, I think we'll leave it there. I just wonder, is this perhaps like one of the most exciting tax years for you, because there's so much going on? I mean, I know you thrive off this stuff.
You know what? I do think I think the most, well, I'll tell you this much, Jacqueline. Last year with 2 kids under 2 at home out of nowhere doing tax season was definitely an adrenaline pumping time. However, in a different way, I'd say this one is the most interesting I've come across, because
Yeah.
Me and my entire team were learning on the go. So it feels like last year when all those government programs came up, I'd have my inbox would flood with like, can I apply for CERB? And it's like, I'm learning as you're learning. Like, I'm like, and then you're supposed to like advise on that, which is like, an interesting place as a professional, to make sure that you are on top of it. So it's definitely the most change. And I find that this is the most amount of emotional labor that I do a lot of emotional space holding and emotional labor for people during financial planning, but taxes is usually pretty cut and dry. And this has been the most amount of emotional labor I've had to do for people, because there's disappointment, there's frustration, there's lack of understanding. It's also been a hell of a year. And I feel like a lot of these people I saw last year, it's now our full year anniversary. I saw them last year while life was falling apart, and now we're like, how are you? And it's been a really emotional tax season, I'll say that for sure. And which is definitely different than normal.
Yeah, I should say I didn't mean it in a inappropriate way to say exciting, but really just because you always dig into these things and you love the figuring it out for people, and we really appreciate that and appreciate you spending time with us today doing it, Shannon. This is Shannon Lee Simmons, the founder of the New School of Finance, and she's got tax courses on her website, and we just really appreciate you spending time with us today, and we appreciate all the viewers. Aubrey, Saba, Stephanie, Margaret, Aishu, for sending in your questions, and we'll try to tackle some more on cbc.ca.